Auto loan trading for dummies.
Of course, I'm just kidding, right? But I recently did a video, Judge Judy, and the girl could not understand that she took out an auto loan. I'm here to help. So, auto loans, right? You go to a car dealership. They are asking $10,000 for their car or truck or whatever, right? We're not arguing how much cars are. We're just doing numbers. $10,000 for the car. Say you put down $1,000. Like, this is called a down payment. So a down payment is like an initial investment. You're showing the bank and the dealership that you're willing to put forth some sort of initial investment money toward that vehicle, right? This is your cash. This is money that you have. You have this money. This is yours, right? How much is that, guys? Brain. $9,000, okay? So $9,000 is the loan you're gonna get. Now, where are you gonna get this from? Where does this money come from? Huh? Where does that come from? Super Mario Brothers? An angel? Velociraptor? None of those. It's a loan from the bank, from a bank. Now, the dealership will tell you what bank it is. I think it's Law. Or it'll also be on all the paperwork that you sign. It'll be there, right? Perfect. Loan from the bank. Let's say in this case, let's pick a really big bank. Let's say right now, Santander. It's your first loan ever. It's a good shot that at least they looked at it. Santander is a huge bank. Okay? So you get a loan from Santander. They are going to charge you for that money. The money is not free. Okay? You don't just take their money. You don't take the money. They give the money to the dealership to pay for the car that you just bought that you now have a loan on. They're going to charge you something called interest. Interest. It is interesting, and also it's interest. Some people call it that, call it APR. And what it is they are charging you every day on an annual percentage rate for the year. Now, that is math that I don't think anybody wants to go through, but that's what they do. So, let's pick a different color. Say the interest rate is 10%. This math is not going to add up. Stop trying to do it. Okay? This is just so you understand how it works. Okay? So what they do is they take this $9,000 and every day there's an algorithm and they charge you interest on that amount. So in the very beginning, obviously, they charge you on $9,000. Okay? But of course, you make car payments. Say your payments are $200 a month. So every month, you'll minus out that money, but they're charging you interest on this amount of money every day. So you're going to now be $8,800 in theory, but it's not. It's probably closer to $8,875 in the beginning, right? Because they're charging you interest on it. So you took a loan, the loan's $200 a month for 60 months. Do this, 60 months times 200 a month. That's roughly going to be paying $12,000 total. Okay? The loan that you got from the bank, I know this isn't a good math, stop it. But now, you're going to pay $12,000 on the vehicle that you financed for $9,000. That's an auto loan that you took out from the bank, and now you establish something we like to call credit, especially auto loan credit. You pay that for the next 18 months, 2 years. That's 24 months, guys. Then you'll get a higher credit score. So the next time you get one of these loans, your APR will be better. Say it'll be like 6%. Well, great. So now you guys understand. Get $10,000, that money down, you make car payments on this. For the term that you contract with, the end of the term, you'll have paid $12,000. But say you want to pay a little extra, you can, and then this number will actually decrease. This is assuming that you pay every single payment on the due date. You don't miss one for 60 months. That's how much you'll pay. Most people trade out early. Different video. Anyways, thanks so much for listening. I have AirPods in because my lapel mic is at work. Like, subscribe, share. The Car Guy Paul. I got funny stuff. I got real stuff. Follow me. Can't wait to talk to you in real life or fake life or whatever. Okay? All right. Talk to you later. Bye.